Welcome back to Moments with Myra, the space where stories, wisdom, and real life conversations meet purpose. I'm your host, Myra, and today's episode is one that every family business owner, homeowner, and dream builder needs to hear. We often think insurance is just paperwork or something we check off our to do list until life happens. But what if the coverage you think is protecting you actually is not enough? Today, we're sitting down with the incredible Shannon Brooks of Brooks and Associates to talk about protecting what matters most, understanding insurance and coverage gaps, which is very important, preparing for the unexpected, and building financial peace of mind. This conversation is informative, empowering, and necessary. So grab your notebook, settle in, and let's have a meaningful conversation together. Thank you so much, Shannon, for joining me today. I appreciate it.
Absolutely. Anytime Myra calls on me, I'll be like, all right, here I come.
Well,
No
it
problems,
means
no nothing.
it means more to me, honey, than you know. So now I know that I've had you on before, but for those of us that are not familiar with you, tell us about yourself and your journey behind Brooks and Associates.
Okay. So I am Shannon Brooks. I also go by Shannon B. I am located here in Winston-Salem, North Carolina. I do have my own company, which is called Brooks and Associates LLC. And under that, I'm a financial services specialist. And so what I do is I help people in three different areas of their lives. One is in the area of finance, and in that area, I do teach about financial literacy. But I always tell people I teach it with a twist. Twist meaning that we don't talk about money, we talk about mindset. Because a lot of times we have to go in and we have to change our mindset and unlearn some bad behaviors and retrain our brain so we can finally get on the right side of wealth. I'm also a life and health insurance agent, but I mainly focus in on the life side because everybody knows me, knows I'm going to forever say GoFundMe is not life insurance, people, and neither is that fish fry foolishness. And then the last component is credit. And in that area, I do teach about credit education as well as assist with credit restoration.
Yes, all of
Mhm.
the things that most of us need that we don't like to talk about with others or don't even want to know what's going on in those areas.
Exactly.
So, what inspired you to enter the insurance industry?
I think it kind of goes back to when I was a child. And I remember riding, I think every child back in the 70s had that little red tricycle
Yes.
with the little ribbons, that little pieces of ribbon that came out, the little, where the little handlebars were at, whatever.
Mhm.
So I just remember riding around in my house in the living room with that little red tricycle. And it was like I guess, I'm not going to say he came every Friday, but it looked like maybe every other Friday. This white man would pull up. And when he would pull up, I love that white man because he brought me a red sucker every single
Mhm.
time he came to the house. I didn't know who he was, but I knew my great grandma Polly must have really liked him because she would go in her purse, as she called it, get this little brown envelope and give, him some money out of her envelope. And then he would go on and, he would just come like clockwork. And then when I got older, I realized that was the insurance man. And what I was realizing as I got older was that my great grandmother, who was born in 1910 and only went to the seventh grade, but she was doing everything in her power back then to make sure that she could keep peace of mind in her house.
Mhm.
So when she passed, when my great grandfather passed, when my grandmother passed, we weren't out here begging, borrowing, or stealing money. We weren't out here having to worry about anything. Everything was handled. And so I always thought about that. And then when I kind of fast forward to when I started working, that's when I realized in working in this call center that there was this big wealth gap between blacks and whites. And working in this call center, I used to be, come in every day. I'm like, I'm broke. I'm tired. I'm trying to rob Peter to pay Paul. Feel like I'm just working just to pay bills. I'm not seeing the fruits of any of the labor that they talk about. But then when I see, the white people over there, I'm like, y'all come in here, y'all is happy. Everybody's smiling. Y'all get here early, like you really like this place. And I just started asking questions to them, and they start talking about wealth. And they start talking about how they build wealth. And they were talking about that they were like life insurance beneficiaries. And then I just kind of just sat back and I said, you know what? If I could take everything that I'm learning now and put it all together, and to be able to go and take this information back to the communities where people that look like me live, And even going back to my own community of Easton, that's where I was born and raised. Shout out to the south side of Winston-Salem. But, being able to say, what do I need to do to take all this back? And life insurance happened to be like, up there, on the top of the food chain for me. So I went, got my license, started out back in, 2005. And, that was, kind of like where I wanted to go with it, each one teach one. When I'm learning over here, let me go over here and let me take this back to people and let them know that, life insurance does not always have to just center around, oh, let me get something so my family members can put me away nice. Yes, let's be put away. Don't nobody want to look like nothing that came off Thriller whenever it's time for them to, to be buried. But it can do so much more than just be something there that's just there to put us away.
Yes. So, what are some of the misconceptions people have about insurance coverage?
Number one, they think it's very expensive.
Yeah.
Most of the time, people say, "Oh, I can't afford it," and a lot of times that has come about because you have agents that they prey on people, and so they'll go and they'll find like a policy that has a big premium behind it or what have you, but that premium really is that person is not about the mission; they're about the commission.
Mm.
So when somebody says, I can't afford it, and I'm like, well, actually, we may be able to find you something. And then when you find an agent who will actually find you something that's practical, they're like, wow, that's almost $100 less than this other insurance agent was telling me. Yeah, because they're putting it out there that this is all that you can apply for, and this is all you can afford, which most of the time is not the truth. So that's one issue that a lot of times I run across. And then the other thing is the misconception that all insurance is one type, and
Yes.
it's not. So you have term, you have whole life, you have universal life. Most Black people just get caught up in the whole life,
Hmm.
and they don't think that there's anything else sometimes besides whole life, or whole life is the only and best option when there are other options. So it's sometimes trying to retrain people's brain to get them out of the habit of thinking that all I can get is just this whole life.
So, now let's go ahead and jump into today's topic. How can someone tell if they truly have enough insurance coverage?
Well, I always tell people, number one, let's just make sure whatever you have is affordable. That's the biggest thing. I said, I always tell people, let's look at what your monthly budget can afford. And then, especially if you're looking at trying to get more coverage or you're trying to get coverage altogether, let's make sure that it's affordable for you. And then we build, from there. But for those who already have coverage, I always say just think about what your overall goal is when it comes down to your family. If your overall goal is just to make sure that there is enough there just to put you away, and there's nothing wrong with that being the only goal, and you know that you have enough coverage according to whatever the average cost of a funeral is now, whether you're having a traditional service or you're just being cremated or whatever it is you're trying to do, as long as you can look at what you have and say this is enough, then that's enough. That's all that you need. But if you're trying to leave wealth and you're trying to create generational wealth, well, you may not be able to do that with just a $10,000 policy.
Mhm.
So now you have to kind of determine how much extra coverage that you can afford. And you determining what you can afford, now that can kind of help to determine what direction you need to go in to be able to achieve that goal.
Okay. So now when you are looking at the different policies, trying to see what people may or may not be able to afford, what are some of the common gaps you see when reviewing their policies?
So a lot of times, especially for our people, what I see a lot of times is that sometimes people, they have a pot, like say, let's say if they have a whole life.
Hmm.
So they have had this whole life policy, and it may have been in effect for, let's say, 25 years or whatever. But with that policy, they never looked at trying to get more coverage. So like I said, let's say a 10,000 25 years ago, that was plenty.
Hmm.
But now with what you're really trying to overall be able to achieve, is it really enough? And so that's sometimes where those gaps kind of, come in is, okay, you may have something, but is it really enough? And most of the time nowadays, people don't have enough.
Hmm.
And then sometimes we've had agents out here that have told people that they had a whole life. It was a paid up policy, but it was
Mm-hmm.
a term policy. So they thought, oh, I have this $100,000 policy that I have paid up. No, it was a term policy and it terminated.
Oh,
So
wow.
that's like another gap where people think that I have this, but really with this, gap of not having enough knowledge, your policy had already terminated. Or what you had back then, nobody came back and said, let's review it again to make sure that it's enough. So that's to me is always where the gap is between when a person passes and what they have. That gap of either not having anything because it terminated or
Mm-hmm.
not having enough. Nobody went and told grandma that $5,000 coverage that she got back in 1990, even though that was way more than enough in 1990, she passed
Mm-hmm.
in 2026. She only had 5,000. Now the family is still in a deficit.
Okay, so that brings me to the why that it's important for people to review their coverage regularly instead of letting it sit and forgetting it. Is there a certain amount of time, Shannon, that they should kind of set up in their mind? Let me review my policy like every quarter or once a year. What would be your recommendation for when they should review their policy?
I would say at least once a year. And if
Okay.
you're not one that really want to go and look at it even once a year, at least every 2 to 5 years. Whatever a person feels that they can think in their mind and say, let me go back and take a look at it. But the main thing is always just, I always tell people, just remember that the cost of living, and even though people may think like, well, if the cost of living is going up, why is the cost of a funeral going up if the person has passed away? And I'm
Mhm.
like, but you got to think if the cost of living is going up across the board, the people who work in that funeral home, the people who are manufacturing the things that have to come into that funeral home or whatever, they still need to get paid as well. So it's like, so if they have to, up whatever they're paying people, it has to come, also from somewhere. So where a lot of times do you put it in the cost of whatever it costs, for those things to be, in that funeral home. So I'm like, so always just think when you start hearing people talk about, oh, the cost of living keeps going up. If you see minimum wage is increasing, that
Mhm.
means that, okay, something is going up. Let me look back to see what I have. And let me just kind of compare notes. I have, say, 10,000. Let me call around and just ask, hey, can you tell me how much, if I pass today, if my family brings my remains to you, how much?
Mhm.
And if they're like, oh, the average is 15 to 20,000. But now you know what you need to do if you're trying to make sure you're not putting your family in a deficit.
Yes, so stay informed and educate
Mm-hmm.
yourself. It's like you always advocate for. Always educate, educate, educate. And no question is stupid. The only
Exactly.
stupid questions are the ones that you don't ask. And it's so important because, like you were saying, our grandparents had this thing where they trusted in what people told them. They came from a place where, oh, well, so and so wouldn't tell me the wrong thing. I trust them or whatever. And a lot of times they do find out down the road, or like you said, if they've lived a long life towards the end, that they didn't have the coverage that they needed or made the changes when they needed to make them. So, what life changes should trigger someone to update their insurance policy?
Like I said, definitely the cost of living. In the event that you may go to the doctor and they're like, okay, we think, because a lot of times I always say, sometimes doctors get it wrong.
Hmm.
But the thing is that you want to be proactive even in the world of life insurance. So it's a thing of if you're thinking about getting more coverage and you've gone to the doctor and they think they may see something, get ahead of that and try to get you some coverage going on before whatever could be going on, if there's anything, starts showing up on your medical reports. Because
Okay.
that's when they can start dinging, your applications from being able to be approved, or if they're approved, they'll be rated.
Okay.
So I always tell people, not to say you walk around here, claiming anything. But, if you're sitting there, you're like, okay, I'm in pretty good health, don't really have a lot going on. You know what? I think I may need to look at some more coverage. Get what I can afford. Now, I mean, you got to go out here and try to get millions and millions of dollars, but get what you can afford. But if you see where something's going on with your health,
Hmm.
then that right there may be the time before anything starts to show up to handle your business.
And what about divorces and having children and buying a new home? Are those also important things that maybe will cause you to say, wait a minute, let me look at my coverage and see what I got going on?
Absolutely. I always tell people, especially a divorce,
Yes.
please make sure. Now, it's one thing if people, because I have seen people, I have, clients. I have clients who they were my clients while they were married, and they're still my clients after a divorce. And
Hmm.
some of them are okay with the ex still being the beneficiary. They have no problem with that. They were like, it didn't work out between us, but we built something together. And if something happens to me, I still want my ex to be able to, be able to enjoy the fruits of the labor that we created.
Hmm.
And so, with that being the case, that's fine. But if it's not, you definitely need to make sure that you are updating your beneficiary, because what you don't want is here you've done moved on, found you your next spouse or your new boo, and you pass away. And next thing you know, your ex can call in and say, let me just see if I was still the beneficiary. And the conversation goes real different for the beneficiary than it does for somebody who's not the beneficiary. So if
Yeah.
they start talking like, okay, verify your information. Okay, we're going to go ahead and start the process of getting the paperwork sent to you. So here's your ex that has gone on to Cancun, and your current boo or your current spouse is sitting at the funeral home with a GoFundMe, because by law that insurance company does not owe anything to anybody unless they're the beneficiary. So I would say when it comes down to a divorce, always make sure you keep your beneficiary information updated if you do not want your ex to receive any of the proceeds.
Okay. Now, is there any kind of clause or waiver, I guess I should say? What if they didn't update the beneficiary, but maybe like in their will, they, left what they wanted, and they wanted something to go towards their current partner, spouse, or whatever the case may be. Will the fact that the old person is still their beneficiary trump anything like that they would have in their will?
Mhm.
Okay.
A beneficiary with the life insurance company always will trump a will.
Okay, y'all. So you
Mhm.
heard it. If the relationship is ending or if it has ended, make sure to check who your beneficiary is, because
Mhm.
somebody that you might not want to be partying on your dime might be partying on your dime instead of the one who's earned it. So make sure that you check into that. That's good
Exactly.
information. Because I think in the midst of everything happening, especially with divorce, if it's a divorce that was kind of contentious and you're ready to get it over and done with, you don't think about that other stuff that
Mhm.
you might have signed in the early years of the marriage. So I
Mhm.
think this is a good reminder for everybody just to make sure that you check in on your policies that you have and verify your beneficiary.
Mhm.
So now many people choose the cheapest policy. What risk can come with only focusing on the price of the policy?
Well, a lot of the, once again, depending upon what kind of policy that you have or what kind of policy that you're getting. So I always tell people, get what you can afford.
Hmm.
However, make sure that if you say, okay, I can only afford $50, make sure you're getting all the bang you can for your buck. So you may get a $50 a month plan, but maybe get a term policy. Yes, that policy is going to terminate.
Hmm.
However, you can get more bang for your buck over a period of time for $50 with a term policy that you may be able to get with a whole life.
Okay.
So you may get, say, $100,000 term policy that's equivalent to a $25,000 whole life plan. And don't get me wrong, there's nothing wrong with either plan. It's just about what makes sense for that person. And if they're more so like, okay, I can only afford this, but I still want to get more bang for my buck, look at the different options that are available for that cost. Because if you have, let's say, a business, you got a family, you have utilities, a lot of people depending on your income.
Hmm.
A $25,000 whole life plan may not be feasible for what you're overall trying to accomplish. If you're saying, if I pass away during this time frame and all of this overhead that I have, 25,000 ain't going to hit it, but maybe 100,000 will. So that's what I always tell people, like, yes, always look at what you can afford, but the key word, but let's make sure you're looking at all the options that are out there so that once again, you can pretty much be able to achieve whatever your goal is.
Now, this is kind of going into my next question, but before we get to that question, for those who may not understand, can you explain the difference between whole life and term
Sure,
insurance?
sure. So a term policy is the most, it was the least expensive. I was
Okay,
about to say the most is no, it's the least expensive, but it's the least expensive because it's going to terminate eventually and it does not build cash value.
gotcha.
So it's just that I call it just pure protection. But it is a good thing, if you have a mortgage, if you, like I was saying before, if you have a business, if you have, little children, little people, and even when they get a little older, even when they're young adults and they still depending on your income,
Mhm.
is a term can be good because it can say, it's gonna cover all of this. In the event that I pass away while all of this is still going on, this policy can pretty much step in and be like, like an income replacement.
Okay,
So that's what term looks like. Whole life is a policy that is more expensive, but it's more expensive because it will not terminate and it does build cash value.
okay. So
Mhm.
straightforward and to the point. So now, what's one insurance policy people often overlook but really, really need?
Oh, let me see. Oh, wow, that's a good question. I guess once again, when it come down to our people, I
Mhm,
think a lot of times, and I get why, we only look at whole life because
mhm.
that's what great grandma had. And that's what grandma had. And everybody know back in the day, it was God's word and then grandma's word.
Yep,
So whatever grandma said, that's what it was.
yep.
So she passed down that whole life coverage. But the thing is, see, back then, Black people were only allowed to get $10,000 worth of coverage, of whole life coverage. Because, see, white people were building wealth with term. Like they weren't looking at the cash value. They were
Mhm,
just like, when I pass away, little Johnny, little Susie, little Matthew, they're all going to become millionaires through
mhm,
wealth transformation. We weren't allowed to do that. So that's why we always just chose whole life because that's all we could choose.
mhm,
And we only could get these small policies and we had to use the cash value to build wealth and
mhm,
try to build wealth because we could borrow against it. But even back in, let's say, 1970, yeah, 10,000 may have been a nice amount, especially if it was only, say, $1,000 or 2,000, whatever, to have a big grand funeral.
mhm.
But even whatever was left or whatever, that's eventually going to be gone because there's not enough there to be able to say we're going to sustain this over years. So I think a lot of times when it come down to our people, because this is all that grandma had, that's all that we think that we could have. But then I always try to tell people, yes, whole life, there's nothing wrong with it. But there are other options out here that you can look at. You don't
Mhm.
have to put all your eggs in this one basket.
Now, you're talking about generational wealth planning. How important is life insurance in today's economy for general wealth planning with your families or businesses or grandkids or whatever? How important is it to have life insurance to start that process?
Oh, it's very important. Because I have learned out here in these streets of networking and being around people and dealing, with people and their money, from some people that make minimum wage all the way up to those who are the beneficiaries of these big old life insurance policies. The number one thing that I want to tell people is that you cannot save your way to wealth.
Mm,
Now, yes, you can put aside, some of your paycheck. There's nothing wrong with allocating a certain amount to go into your savings account. But let's just be real. In this day and age, in this economy, most of us, when you put that money in your savings account, 9 times out of 10, before the month is out, you got to go back and get it. Not because you're doing anything wrong, it's just the cost of living is just crazy right now.
mhm.
So every time you try to save, you end up having to go touch it. And most of the time you don't put it back because something else comes up.
Yeah.
So I look at the same concept when it comes down to trying to build wealth and trying to leave generational wealth. So I'm not always going to say that white is right because it's not. But I look at the concept, the blueprint that they put together with life insurance. They don't work. And now when I say they, I'm talking about the wealthy. I'm talking about the people who they were able to, like, oh, that makes sense. I get it. They don't save their way to leaving generational wealth. They look at life insurance, just not all of the components, but life insurance is one of them. And so they'll say, okay, I'm going to take out $1 million policy on my life, and I'm going to get this 30-year term policy. And then when I get, a little older, I'm going to get me another 30-year term policy for say 500,000. Then when I have my children, I'm going to get them some what they call an IUL, an index universal life, which
Mhm.
is pretty much an extension of a whole life. It's just the cash value is structured differently.
Okay.
So they may say, I'm going to get $1 million policy on my child. And then when my child has a child, I'm going to get $1 million policy on them. So they get these big high number, policies, but they're not paying a whole lot of money for it because they structured it in a manner to where, okay, if I pass away when all these policies are active, all of this is going to my family. All of this is going to my trust. But then if I decide that I want to try to build wealth while I'm still alive, these IULs that I have taken out sometime on myself, but on my children and my grandchildren, I'm going to pull from those particular policies. And now I'm going to, open an investment account. I'm going to come over here and start a business. I'm going to come over here and start a college fund. Because once again, they're not using any of their income to try to save to build anything that has to do with wealth. They use everything about their income to live, whether that's taking a vacation, whether
Mhm.
that's going to the mall, buying whatever they want to buy. Like they're not concerned with, oh my God, I have to try to save something because they were able to get the blueprint together that I can use life insurance as a portion, of my wealth building to be able to build it while I'm still alive and transfer it when I pass.
That is good information. And just as I'm listening to you kind of lay out the blueprint of everything, and the one thing that I appreciate about you, and I tell you this all the time, is you break it down in bite-sized pieces where anybody can understand what it is. And like maybe, say, well, I know that I'm 50 some years old, but it's never too late to start. You know,
Exactly.
really, really appreciate the way that you present and lay out the information.
Well, thank you. Thank you.
Absolutely, honey. Now, along those terms and those lines, what about coverage for entrepreneurs and small business owners listening today? What type of coverage should they absolutely consider for themselves?
Well, I would say number one, a term policy.
Okay.
And once again, like I said about the term, if you have a business that you're trying to transfer over to your business partners if something happens to you, or you're trying to transfer as a family business and you're trying to transfer it on to your children or a sibling or a cousin, or if it is in a trust or however you have it set up, definitely need a term policy that's there to be able to say this is going to be able to replace my income,
Okay.
especially if you have a business that's really thriving, because a
Mm-hmm.
lot of times when the main person of the business pass away and they don't have anything there to kind of, make up for that income, that business normally has to dissolve. But
Mm-hmm.
having a term policy or term policies can be there to say this is just going to be here for protection. An IUL, like I told you about before, the IUL is pretty, like I said before, it's a whole life. It's just the cash value is structured differently. And a lot of people like the cash value portion of it because they look at it like, okay, I have a death benefit, but I can also borrow against this cash value that's accumulating. And I can take this out and do the things that I need to do with my business. So I always say, like I have it like an example. I have a hairstylist that's one of my clients, and she purchased like this $500,000 IUL.
Mm-hmm.
And now that it's starting, the cash value is able that she's there now where she can, start taking it out. Well, see, now she wants to do some upgrades to her salon. She's not
Mm-hmm.
having to take out a loan. She's not having to touch what's in her savings account. She's not having to go borrow it from somebody else or whatever. She's just like, well, there's X amount of dollars over here in the cash value portion of my policy. I'm just going to pull this to get my upgrades done. Now I can get another shower bowl. Now I can get another chair. Now I can afford to get this AI system that I wanted, and I don't necessarily have to try to take all my appointments and write them down. All the things that most people that do what she does, they're like, oh my God, I need all these upgrades, but I just don't have the money to do it. But she was able to pull from her IUL's cash value to be able to do that.
That right there is such a beautiful story. I mean, like I said, because of the way that you break it down, even for myself that felt like I was so knowledgeable, about these things, every single time we sit down and have a conversation, I learn something new and something else for me to think about for expansion for myself and my family. So I really, really appreciate that. Now,
Absolutely.
along those lines, because I know we talk a lot about grandma and older adults, those types of things, what advice would you give to young adults who are just beginning to build financially?
I would say get as much coverage as you possibly can. The best rates are available for those young adults between the ages of like 18 and 30.
Repeat that for me.
Yeah, the best rates out here for young adults are those between the ages of 18 to 30.
Okay.
You can pretty much kind of get almost really any kind of policy that you want. And yeah, you're going to pay more if you get certain types, but you will not pay the price that you would pay for somebody that's my age, like I'm 50.
Hmm.
If you are 25, half my age, you can get almost probably $1 million in coverage across the board, just stacking policies, whether it's a term policy, a whole life, an IUL. You can get all that coverage probably, and I'm just throwing out, I don't have my quoting system here in front of me, but you could probably get all that coverage, maybe give or take between say $200 to $300,
See.
depending upon what kind of policies you get, if you get all three.
Hmm.
But if you get, let's say, just a $1 million term policy, that right there may not even run you $100 a month.
Wow. And you can't beat that.
Mhm. And see, and a lot of times when it's funny you say that because about, like, young adults. And, once again, looking at my white clientele. I have my white clientele, some of them that I, graduated from Carver with.
Hmm.
They'll hit me up when their child turns 18 and they're like, look, I need for you to meet with my child and they need to go ahead and get a policy. And 9 times out of 10, they're going to get at least $1 million, 30-year to 40-year term policy on their child. And then they're like, okay, I'm going to get an IUL, on my child, or my child just had a child. And that's what they do. They don't do like, and don't get me wrong, because I love me a good old baby shower. I
Yeah.
love me a good old baby shower. I want to come do the electric slide and the cha-cha slide. And yes, I want that fruit tray and that cheese tray and
Yeah.
that meat tray.
They
And
know me.
yes, I'm gonna go
Yeah.
buy that baby, something real, real nice. But on the flip side, when white people, they don't do all that. They come with savings bonds. They come to the table, with a stock certificate, or
Hmm.
they come and they all donate maybe $100 a piece to say get this insurance policy started.
Hmm.
But when
Now,
they're like it's like that 18, like I said, but going back to that 18 to 30-year-old mark, that's what they do. That's how they pay it forward to their children and their grandchildren.
and get things going.
Exactly.
Now, in communities of color, we know that conversations around financial literacy and protection are becoming more important. Why do
Mhm.
you think these conversations matter even more now than ever? And how can we be creative to get this new generation to see the importance of it?
I definitely think it's extremely important in this day and age. Just look at the economy.
Yes.
And then look at where we are as Black people when it comes down to ownership of anything. Look at when it comes down to the wealth gap that's not just now between Blacks and whites, but Hispanics, Asians, and white people. We're
Yes.
still coming in last.
Yes.
But at the same time, we're some of the ones that make the most money.
Hmm.
And a lot of us are hustlers out here. So it's like, and there's nothing wrong with hustling. Like I tell anybody, because that's what we've been doing ever since. I remember growing up, everybody had their full-time job in the
Yep.
neighborhood, but everybody had a side hustle. And that's how you made ends meet. But I'm like, but now we have access to more resources. We have access to more information, more knowledge. It's high time that we, get together and we sit down and we try to utilize that knowledge to be able to start to, close in that wealth gap
Yes.
and start the ability to say, now let's look at ownership. Let's look at what our great grandparents and our elders and our ancestors, all the things that they went through. I always tell people I'm standing on the shoulders of greatness when it come down to my ancestors. But I think about all of the hell that they had to go through. They went through a lot just to say, I purchased a home or I purchased a car. I think sometimes we have to tell this generation here, let's look back. Let me take you back in time. So all the
Mhm.
things now that you like because it's quick, it's fast. You got all these social media influencers who I feel like half of them are lying anyhow,
Mhm.
or half of them just as broke as everybody else is.
Yep.
But we're out here following all these trends because we're trying to make up for what we didn't have as a child. So I couldn't dress nice as a child. So now I'm gonna do all this now that I'm older. But we just have a bunch of stuff, but we're not owning anything,
Mhm.
and everything we have doesn't have value. And I'm not saying that about everybody that looks like
Yeah.
us, but a lot of times talking about myself. When you coming from the hood, you coming from a place of lack. Sometimes your financial literacy journey just gonna be a little out of whack.
Mhm.
But if we can just sit down and just start having those conversations to be like, look, this is something that we need to do so that we're not out here being statistics. We're not out here with these GoFundMe accounts. We're not out here with this fish fry foolishness. We ain't out here just trying to sell these t-shirts all the time. Somebody down the first, and it's the first of the next month. They finally can bury somebody, and that person out there looking like something out of Thriller because they done changed colors and they just looking a hot mess. Been sitting back there on ice, on dry ice, just looking toe up from the flow up. I'm like, no, we got to get out of this. But how do we get out of this? We start having those real conversations. And
Yes.
how do we get younger people to come to the table? That's why I say you got to get creative sometime. Like me, I host sessions where we do like financial board games. So people come, they're able to play these board games. They're actually able to have fun and laugh. Because I think sometimes also we have to make it where people are interested in what's being said. And so it has to resonate with them, but you got to do it in a fun manner. Nobody wants to just sit around and just come to some, class and it's an all day class and you're like, oh my God, when is this person
Mhm.
going to shut up? So I
Mhm.
always tell people you got to get creative.
Out before
But
it really
once you can
gets
figure out
started.
what you can do to get creative and be creative. hmm
So now, as we're starting to close, what does legacy mean to you personally?
I think for me, legacy and leaving a legacy is about being able to, write that, I would say like write that love letter to your your relatives or your family, your friends. And in that, it should, if you're like, okay, I'm out here, like I look at my family. I'm trying to leave that legacy to be like, yes, I want people to remember that I was a good person and that we can have a good time and we got all these memories. But I'm also leaving a legacy for my son so that
Yeah.
whenever he wants to go on with his life, that he can say, I'm living, off of what my mother, left for me. My legacy is so that he don't have to struggle. My
Yes.
legacy is that he don't have to deal with what I had to deal with. And that's what I tell people when it come down to what is your legacy. Write your legacy out. Yes, people should remember you for being who you were and who you still are. You're just in a spiritual form. But
Mhm.
also being able to say, you know what? My mama or my grandma or whoever loved me enough to where this house that we lived in is now paid for because they
Mhm.
left enough to pay it off. I'm able to go to college now. I'm able to, fulfill my dreams off of the backs of, my, mother, father, whoever that was there that left something to that person. So that's what I feel about when it come down to that financial legacy. Be an atmospheric transformer. That's what I call
Mhm. Mhm. I was waiting on you to say that.
it.
I was waiting on you to say that term because
hmm
I believe in that wholeheartedly.
Yes.
Wholeheartedly.
So that's what I believe in. Like you're doing all these things, but you're doing that transformation. It's like, yes, let's leave the legacies. Yes, let's leave the memories. But let's get out of the habit of only leaving memories. And we all have the ability to do it if we have the right education. We have the right person that's in front of that person to say that, okay, this is what you're trying to do. Let me help you to map it out. And then once you're able to do that, having the discipline to do it, So
Mm-hmm.
just like my great grandma Polly used to always say, when she was still alive, whenever when God calls me home and my head is cool,
Mm-hmm.
I've gone on to glory and I'm wearing my crown. When we can look at life like that and we can look back, I feel like God allows us sometimes to be able to look out the clouds and look down and see. Guess
Mm-hmm.
what? There's a cookout going on. There's a barbecue going on. Everybody's having fun. Yes, you're mourning the person, but you know for a fact that everybody down there, that person left something
Yeah.
behind. And it wasn't just that $100 bill you got to go find in the Bible. And nothing wrong with that. Now, grandma leaving $100 bills in the Bible, by all means, you better take it.
Yes.
But being able to say, wow, I was able to be an atmospheric transformer. That
Mm-hmm.
house is paid for. Them cars is paid for. Them kids' education is paid for. If you leave here before your parents do, my parents can now live on. I can live in inside of them, but their home is paid for. I was able to do these things and to be able to transform lives. And for that, the life wasn't in vain.
Yes. Yes. So if listeners could take away one message from our conversation today, what would you want them to remember?
I always say it. GoFundMe is not life insurance, people, and neither is that fish fry foolishness. I
Yes.
know people hear that sometimes from me and they be like, oh Lord, here she
Here
comes.
she comes.
Yeah, here she comes with that again. But I'm just like, but it's so true. We have the ability to change that narrative. We can be the change that we want to see. If
Yes.
you know you have the funds to do so, stop waiting around till tomorrow. Now, if you don't have the money, and I get it, because there are sometimes people just can't afford it. Those people are the ones that I do not, they're not in this equation. But
Mm-hmm.
if you know that you have it and you can do something about it, do it. Because people like me don't do the GoFundMe's.
Yes.
PTO, prepare the others. I'm not coming and I'm not giving. It's not
Yes.
my responsibility. And I always say, your urgency is not my emergency.
That part.
And an emergency on your part does not constitute one on mine, especially
Yeah.
when you knew better. So I always tell people, know better so you can do better.
And also too, because we always keep it real, can we even slide in there to the ones that are hustling and making their money? There's still a way for you to invest in your children's future, have
Mm-hmm.
coverage. If you're out there living by the sword, so to speak, make sure that you have the coverage to cover that situation that might arise from you living your life a certain way. It's so important
That part. So
because they have all this money rolling in from whatever it is they're doing. But then, like you said, when something happens to man or whoever, then that's when you have to have the GoFundMe and that kind of thing. So be smart with investing your money, no matter how you come by it. We're not here to judge nobody. We're just here to educate. But just be smart so that your family don't have to be the one that's picking up the pieces if something happens to you.
that part. All of
Yes.
that. Mm-hmm.
So as we're wrapping up, how can people connect with Brooks and Associates and learn more about protecting their families?
Okay, so I am on Facebook under my name, Shannon Brooks. I know there's probably a ton of us out there, but I'm in Winston-Salem, North Carolina. So I can be reached that way. I can also be contacted via phone, 336-252-8710 as well.
Okay, and also, guys, if you have questions or want to reach out, get in touch with Shannon, you can also reach out to me, and I'll be more than happy to connect you. Thank you so much to Shannon Brooks for sharing wisdom, guidance, and practical tools that can truly help us protect our families, our businesses, and our future. Today's conversation reminded us that insurance isn't just about policies, it's about being prepared, peace of mind, and making sure that the people we love are covered when life takes an unexpected turn. To everyone listening, don't wait for a crisis to discover what you don't have covered. Ask questions, review your policies, and protect your legacies. Shannon, thank you.
And thank you.
Have a great day, everybody.